Hello, hello, hello. This is Helen Thomas and the CDFM study group. Today we're going to be reviewing CDFM Module 3, Competency 2, which is Accounting and Finance, and we're going to be focusing today on the finance section. And so we'll begin on page 3.2.5. There are 4 major functions of finance that's listed on the slide, also in the paragraph on that page. You have entitlements. We're going to look at each one of these. Let me make sure. Yep. So entitlements, payments, collection, and control of public funds. Understanding that the function of finance in the Department of Defense is controlled or maintained by DFAS. That is the agency or the organization inside of the Department of Defense that's responsible for this function. So that's on page 325, that last paragraph, where it talks about DFAS. So the Secretary of Defense designated DFAS to have responsibility of the finance function, just in case you're asked which part of defense handles that. On page 6 at the bottom, it goes into the DoD FMR or DoD 7000.14R specifically. That's what I'm pointing out, because if you see it again, they might ask, which is the DoD Financial Management Regulation? Is it DoD 7000.12R, 0.13R, 0.14R, or 15R? If you don't focus in on the 14R, when you see it on the exam, it usually all of them look right. So I think 14R is the only one that we really focus on in the CDFM. So that is the DoD regulation, starting from volume 1 through 10. So you don't necessarily have to memorize what's in each volume, but understand that the financial management regulation for the Department of Defense is the DoD FMR 7000.14R. All right, the first function of finance begins on page 328. And we said it's entitling. What you're trying to do in entitlement is you're establishing the legal document, the legal information that says an individual is entitled to a certain amount of pay. Are they entitled to housing allowance? Are they entitled to separation from family pay? So with all those rules attached. So the bottom of page 8 looks into voucher preparation. It's just remembering I don't know, as far as those of you that are on the line, have any of you worked the finance function? Most people I meet now have been doing the resource management side of the house. Anybody have done finance? I'd say other than me.
I'm new to the government, but I'm on the FMA side, doing accounting and finance, basically. I didn't hear you.
I'm trying to multitask, but I heard you. Yes. Hold on 1 second for me. In a meeting. Thank you. Right. So, the function of finance, a financial manager is not just responsible for resource management, not just which most of us are familiar with. You're also responsible for finance. That's actually paying folks. So we do have individuals who work on the finance side of the house. So entitlement, your voucher packet, it tells you at the bottom, those are your supporting documents. Even on the resource management site, you have to have supporting documents. So a copy of the contract, invoice, whatever those supporting documents are, that shows that that individual is entitled. On the top of page 9, a disbursement voucher must contain the following 5 elements. When you're studying, you're looking for those must have or a list of category of things that has to be there. Because if they tell you which one is not necessary or which one is not the elements of the voucher, you'll be able to pull it out. So voucher heading and date, the account classification to be charged, how much, how you're going to pay it, and who you're paying it to. So you can kind of think it through of what makes up the list of 5. And then certification, you must have a certifying officer. In module 1, you'll see how this stuff overlaps because we talked about certifiers. We talked about fiduciary certifier versus pecuniary certifier. And when you commit a document, when you commit a contract request, you are the fiduciary certifier when you certify those transactions. And when you are dispersing, when you get ready to make the payment and you certify the payment, that is pecuniary, dealing with the money. So on page 11, it should look familiar because in module 1, it also talks about accountable individuals, departmental accountable officials, certifying officers, dispersing officers. So this is similar information. So whenever you study module 3, go back to module 1 and see if they had more details on that side. The bottom line is a certifier, if they're not comfortable with signing off, they're not sure that advanced decision, I think was mentioned in module 1 or 3.1, the fiscal law piece. In the slide on page 11, it talks about getting the advanced decision. I don't know if you can see it there because it's not bolded. So all of that still overlap. And advanced decision is also mentioned on page 12. When you are a finance officer or dispersing officer, accountable individual, on page 12 under advanced decision, it says you are an agent. You are a representative of the Treasury. So remember we talked about when Congress appropriate the money, the Treasury issues Treasury warrant, individual pays. When you become a dispersing officer, you actually sign, I don't know if it's same in all departments, but like a signature card where it says that you're authorized to disperse funding. So you become an agent or a representative of the Treasury. On page 3 to 13, it goes into improper payments. If it's determined that something is paid out improperly, this is the definition. An improper payment as any payment that should not have been made. It's exactly what it sounds like. Is after some investigation, somebody brought to you an illegal marriage certificate. Because back in the day, I've worked on the finance side, and later on you'll find out, oh, they weren't even entitled to housing allowance, but the documents we received looked legal, had the stamps and everything on it. And so there are instances where you have improper payment. So the Improper Payments Elimination and Recovery Act of 2010 provides the definition of an improper payment that should not have been made under statutory, contractual, administrative, or other legal requirements, or you pay the wrong person. All right, let's talk about pay on page 14. So certifying military pay, all your military members gets paid on a 30-day month. So whether the month has 31 days or the month has 28/29 days, they're calculated based on a 30-day period. Leave on page 15, and we're still on military pay entitlements. So leave, all members are entitled to 30 days leave per year. And upon retirement or separation from military personnel can sell back up to 60 days leave. Well, a lot of us do kind of bank it until you get ready to get out, and you have up to 60 days you can get money for, but you'll be taxed on it. Most of us just take the leave before you leave, that separate from the military. Some of the allowances, so you have a list there. You have 4. Subsistence, which is food. Basic allowance for subsistence is food. Quarters is housing. Are they entitled to housing? If they are, based on a marriage certificate, then they get housing allowance. Some military receive clothing allowance or uniforms. The enlisted personnel gets a clothing allowance annually when it comes to the month in which they join the military. An officer only receives a one-time payment when they first become an officer. Their initial allowance is not more than $400. So even if the dollar amount changes in newer years, officers only receive that clothing allowance once when they first become an officer. Enlisted receives it annually. And then personal allowances they may be entitled to, depending on where they are assigned. Still on the military, up to page 16, military allotments can be discretionary, where they select which allotments they want, or non-discretionary. There's a limit on the amount of discretionary, meaning, let's say I have a car payment and I don't want it to come out from my bank. I can set it up out of my military pay as a military member, and they pay the car company directly before it hits my paycheck where I see it in my bank. Non-discretionary. All right, there's 6. You can have up to 6 discretionary allotments if you're a military member. A non-discretionary allotments, you can have unlimited. Let's say you have a debt you're paying back. You have child support, all those things that can hit that's outside. You didn't initiate it as a military member, but agencies can do that to get money out of you, is unlimited non-discretionary allotments, all for the military. Your military personnel are all covered under Title 10 of the U.S. Code. And I say that because the civilians start on page 17, and your civilians are covered under Title 5, meaning anything you want to know about civilian pay, promotion, you go to Title 5. So let me write that in my book. Title 10 for the military, armed forces. And your civilian on page 17 is Title 5. No, it's not in the page directly in front of you, but throughout the study guide, you'll find Title 5 and Title 10. Time cards on page 17, certification of time card, work hours. Civilian work 26 pay periods within the 52 weeks. That's what I pulled out the first one. Premium pay, if you're entitled to overtime and so forth, that's your premium pay. Page 18, leave hours. So they're different types. So let me go down the list. Family friendly, FFLA, says that an employee may use up to 104 hours of sick leave, even if they're not sick, to take care of someone else, a significant other or family. So FFLA, Family Friendly Leave Act, you have 104 hours that you can use of sick pay to take care of a family member or significant others. DOD's federal leave sharing program. That means as a civilian, and I've seen this done, let's say someone is sick and they have cancer and they've used up all their sick leave. There's under the DOD's federal leave sharing program, civilians can say, hey, I want to donate my leave for Miss So-and-so or Mr. So-and-so. And you could do that. So that's the federal leave sharing. Excused absences. Usually you'll see that in taking leave without pay. from duty without loss of pay and without charge to leave. So an excused absence is allowed in a number of situations. They tell you where to go if you want to read a little bit on it. If you're a bone marrow or a donor, you donate bone marrow donor, provides paid leave up to 7 days for bone marrow and 30 days for organ donation. Oh, here's the leave without pay. So excused absence is different from the leave without pay. I think I mixed those two up. Excused absent, okay, I'm excused to be on leave or have an appointment or whatever, that's excused. Leave without pay is an authorized temporary absence from that position. You're not coming into work, but we're holding your position until you come back. Family and medical leave pay provides up to 12 work weeks of job-related unpaid leave in any 12-month period. Let's say you had a birth of a child, placed with employee for adoption, but so you have the family and medical leave, that's 12 work weeks. And then the Family Friendly Leave Act is 104 hours. Don't get those two mixed up. 12 weeks. Any question on certifying civilian pay entitlements? That's your leave hours. Okay. On page 19, it talks about pay records. And so take your look at page establishment and control of employee pay records. That's the second paragraph there. The last line says civilian pay records are retained for 56 years. That triggers something in my brain. Let me. Okay. All right, that's coming up later. All right, so pay records are kept 56 years. I don't have anything else highlighted there. Travel entitlements, 320 payments for travel entitlements. That's straightforward. TDY orders on page 21. Make sure, since we don't deal with the manual TDY documents anymore, travel order, make sure you know the travel order number is DD Form 1610. That's at the top of page 21. Before DTS came out, we used to walk around with the 1610, get it signed manually, and then fax it and get it processed. Now you have DTS, but know that the document, the orders document that gets printed up for your authorization is a 1610. Likewise, under travel claims, since most of you are not familiar on the finance side, the voucher, when you come back from TDY and you settle your voucher in DTS, the form number is a DD form 1351-2. Why they couldn't call it a 1610-2 to make it easy, I don't know. But all right, so does everyone get that? Give me a thumbs up or hands up or whatever. If you have any questions, if you don't get it, y'all get it? Okay. So this is the voucher. So the authorization is 1610. The voucher is 1351-2. These things you have to know for the finance section. Questionable travel claims are those where the certifying officer believes to be illegal, improper if the amount is less than $250. The certifying officer can request, so I'm reading the second to last paragraph, can request an advance decision from your legal folks, general counsel. Who can, let's see, general counsel, requests for amounts over $250 require advance decisions by the Defense Department's Office of Hearing and Appeals for DOD civilian employees. So if there's some question on whether someone is entitled to something, you got to do the due diligence of determining the document that they presented, and was it a legal document? Although not directly stated, I don't think it say, when are travel vouchers supposed to be submitted? When are travel vouchers supposed to be, once you finish the trip, when are travel vouchers supposed to be completed?
So
And
48 hours?
you get a little bit more time. It has to be
Oh.
done within, go ahead.
The end of the month?
Nope, once you come back from TDY, you have 5 days to complete the
days.
travel. That's legal. And then once you start going over that 5 days, you start getting those delinquency reports. So delinquency doesn't necessarily mean that, hey, you didn't pay your bill. It could also mean you unsubmitted voucher, you didn't settle a voucher, which also means the card hasn't been paid if you use the government card. So the timeline when you start hitting the radar is when you wait 5 working days and you go over and you don't complete that 1351-2 inside of DTS. So 5 days. 3222 talks about travel from PCS mode. What you need to know here is who pays for the travel when you move from one location, who pays for civilian travel. And as it states on the last sentence or second to last sentence of the top paragraph on page 22, all costs associated with a civilian permanent duty transfer move are normally charged to the gaining activity. And the exceptions to the rule that the gaining activity pays are as follows. If the individual is going between components, a reduction in force, transfer of funds, or movement under the DoD priority placement program, that means the organization you left is paying, and within the same component, any one of these, reduction in force, transfer, base realignment, moves from Oconus overseas back here, from Oconus to Hawaii, then what this is saying is that the losing organization pays. Otherwise, the gaining organization always pays for permanent travel. Any question on that distinction? So normally is the gaining organization. Payment packet on page 23 tells you what is supposed, when you make a payment, those are the supporting documents that has to be in the packet at least. Payment to vendors to your contractors on page 24, either through fast pay. A contractor is authorized to certify that the goods have been delivered. So again, this is all part of what's in the contract and how the contractor gets paid, pay and confirm. So you need to know the differences between those 3 special conditions. So the invoice has been paid, but the certifying officer has not received the receiving report. Fast pay contracts described in the previous paragraphs are an example of pay and confirm. That means the contractor, as soon as they deliver the product, they submit their invoice for payment. Another common example, I'm reading the second paragraph on page 24. Another common example is the payment of government purchase card invoices, which are typically made prior to matching all documents and obtaining acceptance on all goods and services. You deal with the GPC card. When you call a contractor to make the payment, they swipe your card. It eventually has to show up in the bank, then you have to match the transaction. Constructive acceptance is considered to take place under the Prompt Payment Act when acceptance documents have not been received in a timely manner. We know that we received the item, the equipment, and we have not received the acceptance document that says, yes, we receive it, the signed document. So you can do a constructive, and I think you're going to have to do one on page 27. What does the Prompt Payment Act say on page 25? Which is OMB Circular A 125. Circular 125. Requires executive departments and agencies to pay their obligations within a timely manner. That's basically what it's saying. Timely manner is within 30 days, just so that you don't start incurring interest. And now you're obligating more funding on that for late payment. So Prompt Payment Act, it typically means you pay the bill within 30 days of receiving the invoice. On page 26, they give you the steps in how to calculate the net payment, how much we owe, and the net payment due calculation. That's the payment due date, really, is what that is what you're going to calculate. So make sure that you review page 26 to know how to do those. Net payment due date calculation step, and then they give you an example of how you come up with the payment due date, because the payment is due a particular date, and then you'll know whether it's late or whether you're paying it early. Because on page 27, on the bottom, it talks about contractors can offer discounts depending on when you pay the bill. The government pays the bill. Sometimes contractors can offer benefit. Who knows what 210 net 30 means? As on the bottom of page 27. Who wants to read that? All right, so this means that the government can take a 2% discount if the bill is paid within 10 days. Otherwise, you pay the entire bill within 30 days. So anytime you see, it could be 310 net 30 or 410 net 30. The two at the top represent 2% discount that the company is offering if the bill is paid within 10 days. Otherwise, the full amount is due within 30 days. So that part is important to understand. So when you're calculating the payment due date, again, is you're determining the starting point of whether you can take that discount or you're paying it within 30 days. Excuse me. On the top of page 3 to 29, it started on 28, but I want to point out DSSN, the dispersing station symbol number. It's mentioned in the paragraph on the bottom of page 28, but I wanted you to see the acronym on 29. The DSSN just shows which finance office made that payment, who dispersed that payment on behalf of the Treasury. Then disbursements of government funds on page 30. There are several ways to disperse. The number one way in which to disperse is using electronic funds transfer or treasury checks. So you have two ways, number one and number two, EFT or treasury checks. Which is the preferred method? EFT. That's the second paragraph on 30. EFT is the preferred method, as it goes directly in the individual's bank. And then you don't have to worry about checks floating out there. Electronic commerce on page 32. Just some finance functions that they use electronic communication to process. So that is just telling you how you use EFT, EDA. and EDI, electronic data interchange. Those are straightforward information. EFTs 3233, there are limited exceptions. Most of them are made by EFT, vendor express, government purchase cards, and the card acquiring service. So on the GPC, the billing official will certify the statement at the end of the billing cycle, verify that what was purchased is authorized, and it should have been done before they made the purchase. And then they certify the payment that was made on that card. Collecting. And actually, let me make sure I point out the functions because we don't want to lose sight of it. So we talked about entitling, which is the first function. And I'm just writing the pages down. So page 328, 328. Then it went into payment. So once we determine that they're entitled, then the second function is now we make the payment. So I'm trying to find that page where the payment begins and leave. Any question anyone has while I'm flipping through these pages?
I think it's page 22.
22. Okay, getting there. I'm gonna say I have it, yeah, because it talked about all the payments. Yeah, payments. Okay, and then the third function is page 34. 3 to 34. That is collecting. And so collection, receipts, a cash collection voucher credible to the Treasury is on a DD form 1131. So what you need to know, the form and what it's used for. Cash collection voucher 1131. If the government has to be reimbursed or refunds, that is the collecting document. I don't have anything highlighted on the reporting systems, but again, when you're studying, still review 35, 36. Collection of debts on individual on page 37. Collection of a debt owed by a current military or civilian. Collection of debt owed by a former military member or former. So it's either they're in the military or in our current civilian, or they got out. They're telling you how we receive the debt. How do we go after them for the debt? So if they're still in service, you can do a salary offset, a non-discretionary payment if the individual hasn't taken care of it. If they're out, then DFAS or DOD shall be sent one letter that explains how much is owed. So typically before anyone starts collecting from DFAS, they'll send you a notification, but you're only entitled to that one notification. Or then if you don't pay, then they'll refer to the IRS. So it makes sense in the process. Just make sure that you know the form numbers involved if necessary, and then the process, or refer to other agencies. On page 38, let's see, more on the debt collection of an amount from a contractor. If you've seen instances where the contractor, let's say, was overpaid or was erroneously paid because we put the wrong cage code or vendor code in there. So they owe that money back. On page 38, referral of delinquent debt to the debt management office. So if it's initiated by the payment office, notify the individual. If they haven't paid it, then you got to refer it to the debt management section of DFAS. $25 or more if a contractor has a tax ID number, then you refer them to DMO. $100 or more if the contractor does not have a tax ID number. So you only go to DMO if they don't have a tax number, then the amount that they owe have to be $100 or more. Debts must be forwarded to DMO no later than 90 days following the debt repayment due date. So they miss whatever the due date is, but within 90 days, you can notify DMO. The Debt Collection Improvement Act requires agencies to refer any eligible debt more than 180 days delinquent to the Bureau of Fiscal Services for cross-servicing, so that if it's not in the individual no longer works in your direct organization, then when you refer them out, then you can see if you find them within the workforce and other agencies. On page 39, you have something called the do not pay list or do not pay initiative. As it states, Office of Management and Budget, OMB, is responsible for completing the DNP initiative. That's usually a list of contractors who's, for whatever reason, we should no longer do business with them. The DNP is not a list of entities or people that should not be paid. DNP provides data sources in one place which agencies can use to verify, are these agencies eligible? Is this company eligible to receive? So you don't pay it until you verify it on the do not pay initiative. And then the fourth function of finance on page 39 is control of funds. So it's the same thing on module 1 when they talk about the flow of funds. Once you go through that process, now once we receive funds, we got to put controls in place. On the first paragraph, under control of funds, they talk some familiar words that you should be familiar with. The DOD's dispersing officers, any deputies, agents, cashiers, and so forth are responsible for safeguarding those funds and the documents associated with those funds, your checks, your cash, money orders. Later on in the last sentence, you see it says certifying officers have pecuniary, because they deal directly with the payment, with the cash, with the money, with the check, they have pecuniary liability for erroneous payments that result from information, data, or service they negligently provide to the dispersing officer. You got to make sure you verify those documents. The first bullet, the pecuniary liability that is associated with the funds means that each DO, dispersing officer, and any person under the DO's entrusted funds must be provided with a separate container, such as a safe, to secure those funds. At least twice a year, semi-annually, the dispersing officer must make an inspection. If you don't have the cash, then you need to have the supporting documents to show that you made a payment, you gave some cash out, who you gave it to. And you must have a safe to secure the money. Access to financial systems must be controlled to prevent unauthorized access. If individual doesn't have access to that area with the cash, then they don't need to be back there, wherever that safe is. So let's talk about dispersing officer accounts, out of balance. Because again, we got to balance our books daily on the finance side. Dispersing officers on page 40 are responsible for ensuring that the funds they're entrusted with are constantly or consistently accounted for. Out of balance says this is a term that describes any irregularity or books are not balancing based on how much money we started with in the beginning of the week, and we come to Wednesday to Thursday. Now we don't have the document and we don't have the cash to explain it. We're out of balance. What you need to know on page 40 to pull out of that first bullet, a physical loss are further segregated by major loss. So you have a loss because you lost the money or you don't have the documents. Something is considered a major loss if it's 700 or more of any loss involving fraud. And a minor loss is less than 750 without any evidence of fraud. Check issue overdraft. The situation occurs when the amount of the check is more than the amount recorded or reported by the dispersing officer. We wrote the check for more than what it's supposed to. Did we make a mistake? Put an extra zero on there. Check underdraft. Underdraft is the opposite, less than what the individual was entitled for. Once you do all the confirmation, you see what they were entitled to be paid, and then you look on your checkbook, your ledger, and you see that you paid less, underdraft. On page 41 talks about delivery of checks. So EFT again is the preferred method to make payments, but sometimes you have to send out a treasury check. And DO will attempt to deliver the check to a payee for 60-day period. That means we send you out a check, comes back, we send you again at the same address. Undeliverable could mean that the individual moves and they never gave an updated address. So a check is undeliverable if after 60 days from the date of issue and it has not been delivered. Reporting of undeliverable check. If a check is not delivered within that 60 days, the undeliverable check will be disposed of according to DOD FMR Volume 5, Chapter 8. The check will then be processed on a schedule of canceled or undeliverable check. Right there, SF 1098. So if you see SF 1098, that's the canceled or undelivered checklist. Payment of old checks. All U.S. Treasury checks are payable in 1 year, and it usually says it on the check. But let's say you found a check, it was only $10, a Treasury check, and it's past that 1 year, but you're still entitled to the money. After that time, that particular check is no longer negotiable, but the amount may still be valid. You're still owed, you're still qualified for that amount, and the check may be replaced. So you will have to notify DFAS, hey, I didn't cash this check. I just realized I had it. It's past the 1 year period. I need to be issued a new check. Spoiled check. You have a check, you spill coffee on it, you spill water on it. It's spoiled. A check that has become spoiled and non-negotiable should be returned to the dispersing officer. Only that the particular dispersing officer or office can issue a new check. Because if you spoil the check and you can't read something on it, you're not going to be able to cash it. And then you have the Borrowing Act at the bottom of page 41. It tells you that if you have an entitlement and you haven't been paid, it says that you have 6 years to submit your claim from the time the claim accrues. So that's 6 years from when you were due that payment. Within that window, you can still file that claim under the Borrowing Act. 31 U.S. Code 3702. Any question on any of that? So the different dispersing reports on page 42. So there's some other forms. So other than the 4 sections or functions of finance, you also got to look at the form numbers. A daily statement of accountability is a DD 2657. A statement of accountability, that SF 1219, is monthly. Then you have the daily agent accountability, the 2665. Voucher control log, the DD form 2659. When the dispersing officer is getting ready to make a deposit to the Treasury, it's done on a deposit ticket, SF 215. Over-the-counter over-the-counter channel application, the OTC net. That's the system that's used for us to manage and report all checks and cash deposit in one place. So whenever you're making a deposit, you have your deposit slip, the SF-215, and then we go on the OTC net to submit your deposit. It automates that over-the-counter deposit process on Department of Defense. Record maintenance. So this is, as they mentioned, the last sentence here. Earlier, we said civilian pay records are kept for 56 years. Now, if you read through this, it says copies of vouchers, books, records, all the supporting documents associated must be retained as government property, readily accessible to the DO, dispersing officer, for a period of not less than 10 years. So these are the 10 years is payments that we made out to the public versus payroll is 56 years. Any question on that? So actually, any question on anything we've covered? Because that's pretty much the meat and potatoes of 3.2, the finance. And let me look through my notes here, see if there's anything to put out. 3.2. All right, so I'll pause for any questions before we wrap it up for today. And then we talked about voucher payments, settlements, payments, collections, control of funds. '26 pay period. Okay, so I don't see anything else highlighted in my notes but to cover. All right, any question on anything we covered this morning? All right, if not, that's all I have for today. I thank you guys for stopping by and coming in to participate in the CDFM study group. If you have questions, even after we're off, you can either email me if it's something directly, or you can put it on the Teams group link so that others may have the same question and just didn't ask. All right, that's all I have for today. This is Helen Thomas and the CDFM study group. I'll see you guys again next time. Thank you.
Thank you.